All right, we're going to continue with calls here. We're speaking with John. John, you're with Allworth's Money Matters.
And then we'll come back to your debanking,
yes,
Scott.
Thank you.
All right, John, what can we do for you?
I'm interested in the debanking, so thank you for that. That'll be entertaining. But that's not my question for today. So I have a question around a potential home purchase that I'm doing. You guys will tell me, I'm sure, somewhat out of order, but I'm trying to piece this together. So long story short,
but you can do any order you want if you've got enough cash to make it happen.
Well, I think I do, but I want to make sure I'm doing it the right way. So I'll throw the situation at you, and you can tell me what you think. But we own a primary residence, no mortgage. Property's probably worth, according to our agent, somewhere around 2.6 to 2.7. And we have stumbled into the potential purchase of a new property. We don't have ours on the market yet. It'll take us a little while to get it ready. So hence the out of order comment. The new home
the home that your primary resident, is that a unique property, or is it you just happen to be in a very expensive area and there's many other homes similar?
Yeah, just a very, very extensive area in Franklin, Tennessee, just outside Nashville.
Very familiar.
Oh my gosh, I was there a few months ago. I could not believe how many massive homes. What's the town next to Franklin? There's that
probably Brentwood.
I
Yeah.
could not believe how many massive homes were there.
It's at the end of the Natchez Trace. Right?
Correct. Yeah, Franklin is on that. And we wouldn't be moving far. Hence we'll be purchasing a house that's actually probably a couple $100,000 more expensive than ours. So normally if we were doing this, what I would consider the right way, we would sell ours and use the proceeds to pay for the bulk of the new one after agent fees or whatever. But if the timeline here is what I think it's going to be, we may need to bridge this for a little while until we can get our home sold. So have you found the home that you want to buy? Like this is have.
Okay. And now you're just trying to figure out how to make the transaction work. Make sure you're not going to blow up yourself financially if it takes you a while to sell your existing house.
Exactly.
Okay.
You got it. And the options that I'm considering are a couple. One is obviously we could do a HELOC on our existing home. And I'm in the process of going through that, maybe pull $1 million or so out of the existing home. Got some assets that I would be able to sell, some investment assets that wouldn't create much of a capital gain for me, call it $500,000-600,000 or something like that. But after that, there's probably still another little over $3 million that's left in an after-tax account. And the path that I'm considering is, which I've never done before, securities-backed loan.
Yeah.
Yep. Or margin loan.
Whatever's going to get the cheapest rate.
Yeah, and they're both pretty high right now.
Yes. Yeah.
It should be somewhere around 11%.
Well, the securities-backed loan, believe it or not, is going to be right around 7%. Yeah, it's not bad. It's actually not a lot different than a mortgage rate, believe it or not. For the securities-backed loan, I have not gone down the margin.
So what's your and you have no mortgage on your existing home, correct?
Correct. Okay. So the idea would be after netting out agent fees and the big fat capital gains tax check that I'm going to have to write for selling this home, I would have enough left to pay back both the HELOC and the securities-backed loan.
Right.
When the house settles. So
few months worth. How much is in your brokerage account of the securities you've got? Not in retirement accounts, but outside of retirement accounts.
Right at $4 million, and like I said, I would probably be selling, call it, I'll round up 600,000 of that,
and then using the securities-backed loan for the rest.
Yeah,
so the answer
to a little over $1 million for that, $1 million of that plus the $1 million HELOC. That was kind of how I was thinking about piecing it together. But
so here's the answer to the question: whatever the lowest cost of money is.
Well, no, I would disagree.
Why?
Because let's say he did all the security. He didn't take the HELOC. It was all the securitized lending. There's risk. If nobody knows what happens tomorrow, right?
Okay.
We know markets are very volatile. We've had periods of times when we've had a 22% drop in one day. So the concern is if you have too much of a loan, if you have you had a $4 million account, you're taking out let's call it 500. You've got 3.5 million, and you're taking $1 million loan on that. I'm very comfortable.
Yes.
Yep.
If you've got a $4 million account and you're taking a $2.5 million loan on it, I would not be that comfortable. I would personally would not feel comfortable.
So I've done all three of these, and two of them at the same time for clients to purchase a home in a very similar situation. This is what I would warn you of.
And I think you're doing exactly the way we would recommend.
Right. And I don't know if I'd worry so much about the HELOC or not the HELOC. What I would worry more about, so Scott, I can see where you're coming from. So if assuming that there wasn't a big difference in cost, you would take the HELOC.
Look at COVID.
No, understand.
But no one's expecting that, and the major decline we saw recovered quickly. But the last thing you want is a loan on a security, and it drops in value, and you get that call. Hey, you need more cash.
But here's what you should worry more about is the time period between actually buying the house and selling your existing one. And you say you need to prep your house for sale. I don't understand what that means.
Oh, it's simple stuff, little nitpicky repairs and maybe paint job in a few rooms.
Okay,
so
couple weeks.
How long?
Yeah, we would have the house on the market. Yeah, probably. With holidays in between, probably a month. Probably be able to put it on the market.
So that's your risk. That's your risk. Your risk
and
is
we would close on
risk?
the new property probably late January. So I would, we would actually be able to have the house on the market before we close on the other one. But we're not going to sell this.
Is the market still
the
market still hot out there?
Yes,
but it could cool in a second.
But absolutely.
So that's the risk.
What's the risk?
Look, you buy this new house, you list this existing one. War breaks out in the Middle East that involves us. It's already happening, but now it involves us.
That's right.
Even more. And the house, it just cools completely. Like, boom, it's done. It's over. Now you're sitting on two houses. Scott, when you built your house, you've sold your old one.
I did. So my personal experience, and one of the things I love about, I've been a financial advisor over 3 decades, and one of the things I so much enjoy about aging is my personal experiences, because there's nothing like personal experiences, right? My wife and I, when our first house that we bought, very modest house, we bought it right about the same time we got married. We sold it 3 years later for less than we paid for it. And I remember I made an extra commission to the selling agent to get, so that they would take people to my house first, right? Because the market was dead. This was in the early 90s.
But you were buying in a dead market too.
And I bought it less than the original home price, and I sold it 3 years later for less, and bought up. I got a screaming deal on the house that we bought up. And it was about 10 years later, we built the house. I had everything was, I had a construction loan. I had cash for the new house. I didn't have to take any sort of additional mortgage on my existing house. But I just had remembered that stress that I went through. And I remember thinking, I don't want to live through that stress. And we sold the house 6 months before our home the construction was completed, and moved into a rental for that 6 month period of time.
So that's why I brought it up, because I remember that.
In retrospect,
it didn't matter.
It was just and actually it gave me twice to purge.
Yeah, but it was a risk mitigation technique, is what it was.
Yep.
Completely.
Yep.
So
and I tend to be a little conservative.
So
I'm very aggressive in like my 401k and I think time's on my side, but I tend to be conservative. Like, what are these
in a
black swan events that can take me out?
In a hot market, people overlook this room needs repainted, or that's a minor repair. I would list the house the same day I made the offer. That's just me.
How old are your kids?
Out of the house. One's 22, the other's 20.
Yeah, and you could weather even if you ended up with both houses, you could weather it. Your net worth is high enough, it appears, from what you said. Yeah, it's just, look, I have
I think the challenge is they've fallen in love with this house. Yeah, my guess, right?
I have an 82-year-old client that we are doing exactly this with right now. They close escrow next week. He's 82. He needs to move. He needs to single floor. But we looked at all these scenarios: the HELOC, the securitization, right? And I'll tell you exactly what I told him. I said, I'm not worried about how we're buying the house. I'm worried about when you sell the house.
Yeah. Yep.
That's my biggest concern. So, but you're perfect. And
what do you have in retirement accounts? 401ks, IRAs?
2.5 to 3 million in pre-tax.
Yeah,
so
you're fine. And how old are you?
Another thing you could do, you can take money out of that and
for 60 days.
Put it back in 60 days later. It's technically a rollover.
Yeah.
Well, can you do that when it's an employer account, or is that? I thought that was only IRAs. Do I have that wrong?
Yeah,
That's right.
It's all in your employer.
How old are you?
I'm 50.
Okay. Yeah, you're fine. You're fine. And I agree with Scott. I would probably, if all things were the same, the interest rates, I would do the HELOC first and then the securitization.
And I would try to get that home on the market
today.
Yeah.
Yep. I'm with you. All those are de-risking the situation.
Yeah, that's right.
HELOC
That's right.
rate is-
Look, and we're talking. Well, you're complete high odds that everything's going to be just fine. Right? I just worry about the long tail on the distribution curves. Like, what could happen? And the longer I've been in this industry, the more I'm convinced that the greatest value we provide is keeping people from making mistakes from which they cannot recover. And so I think that's why you called us, right? Like just making sure you're not thinking that too crazy here. And it sounds like you thought through everything.
Yeah, and I like the fact that you're selling securities and actually that you don't have any gain in margin or
you thought you were thinking exactly the same way I would be thinking.
Perfect.
About it.
All right, appreciate the call.
Yeah,
Thank you.
And good luck on selling and drag out the purchase.
Yeah, have a good time.
Escrow as long as you can.
Have a good time moving all that crap out of your big old house into your new one.